Welcome, everybody. My name is Paul Siegel. I am the president of CandleCharts.com. Joining me here tonight is Brian. Brian is one of our NISSIN certified trainers. What that means is that he is one of only two people in the entire world that is allowed to teach on Steve Nissing's behalf. Steve Nissing is the owner and founder of CandleCharts.com, and he only allows two people, that's Brian and Sil, as our two NISSIN certified trainers to, again, teach various students around the globe on the using of candles in any market, any time frame. One of the main components that Steve has taught for years and decades is what he calls the Trading Triad. What Brian is going to be doing here in just a couple of brief examples is talking about what the Trading Triad is, a couple of examples of the use of the Trading Triad, and then he's going to tell you a little bit about a resource available if you would like to actually understand in full detail how you can also use the Trading Triad in all of your trading. Now, Brian's going to be taking over here in just a second, and then when Brian's done, he'll stick around for a couple of minutes for questions, and then I'm also here to answer any other questions that you may have. Now, we do have people that will be watching this via recording, so if you do have questions for either Brian or myself, as you're watching the recording, you could always email me directly, paul@candlecharts.com. And if the question is for Brian and you send it to me, I will certainly forward it on over to Brian. So without further ado, I'd like to welcome you, Brian, to this session, and I look forward, as always, to your great education that you're going to provide for our students. Over to you.
Thanks, Paul, and hopefully everybody can still hear me. And a big welcome and thanks for joining us tonight. I know it's different time zones for everybody. So again, this is candlecharts.com. This is our open house, and we do have a little bit of housekeeping that we usually go through here. So bear with me 1 second. Our risk disclosure statement, no, I'm not going to read the whole thing. I'm going to leave that up to you, but it is found at the bottom here. You can see the link, candlecharts.com/disclosure. And it does talk about the potential risks of loss when trading any type of security. That's going to include options, the Forex, equities, ETFs, the whole 9 yards. There is a risk of loss. So again, what we're trying to show you here today and what you should be getting a takeaway from here is that with some good education, you can set yourself up for higher probability trading. Okay, Paul, and just so you know, Paul, that I was going to take a look at crude tonight, crude oil, for the first snapshot. So guys, bear with me. You might not all want to trade the commodities, but do stay with me. There's a lot of interesting stuff here. And again, this all comes down to the 3 different mega packs that we have. So we've got the mega pack, which is a 4 volume, the Forex, a 3 volume there for frontline Forex, and of course the options 3 volume package. And they're going to give you the knowledge to be able to trade each respective market, in this case, crude. And I wanted to focus in actually on what happened here. Really, it was just last week. We had the Friday close down here, and all of a sudden Monday we jumped up. And you can see that was very, very powerful. So again, we're reading the candles, and this is part of the triad. You need to be able to read the candles to say, first of all, there's a rising window. What might that mean? And that's pretty powerful in itself. Of course, there was an actual incident, and again, supplies were being curtailed, hence the price of crude oil jumped. And we did finish with a green candle with a little bit of a tip on the top, a little bit of upper shadow there. But as you can see, I've got a couple of blue lines, horizontal blue lines up here, and you can see all the way back here on the left, and even over here, we had support here, we had resistance here. So again, change of polarity, change of polarity from the support becomes resistance and another potential resistance point. So I wanted to point that out, although this was a morning star, and you can see on the NISSIN software that we've got here to identify the candle patterns, we had a morning star with the rising window, but again, it's coming right into a resistance area. You've got to look at your Western technicals. You don't have to get overly technical, and I've got a lot of information on this chart. For example, when I do the coaching and when Steve goes through in the mega packs, he starts off very, very simple. Keep your screens clean, understand what you're looking at first, and you can add bits and pieces as you feel comfortable with them. So what happened on the next day? We had a fairly forceful bear sash, and it pushed everything down to your 9-period moving average. So again, yes, I use the 9-period, 20-period, 50-period moving averages, and we bounced along there. And then we came down, and magically, I'm going to say magically, it isn't magic, but I've got a little short little blue line in here and this was the lower portion of that rising window, and we've closed it. So now what happens next? And that's a very good question. Well, we don't know, but we have come into another potential support area. So again, blew through this resistance line here, hit that one, and we've come back and closed the window. A lot of things can happen from here. And again, what we're looking for is the next trigger signal. Now, I also have rising trend lines and other support lines down here. In this case, a potential support. We had a nice pivot down here. Very important, and this is a very powerful area at this point in time. We've hit it a few times to the left as well. So again, possible we get a bounce down to here, but we've got to get through this rising trend line. So again, so far, this is acting as support. We've got the 50 period moving average, and we've got this little rising window here, and so I've drawn a line there as well. So this is quite important. Let's go on to the actual triad, and there we go. This is what the trading triad is all about. And we've got Nissen candlesticks. You've got to look at them, you've got to know them. And to be honest, you've got to know which ones are more powerful than the others. So as Steve talks about in these packages, the force of the candles. You may have a bullish engulfing candle, you may have a hammer, but each of them could have significantly different forces attached to them. So you've got to be able to identify how the candles are really reacting to the market, what's happened and where are they happening. I already talked about the Western charting tools. So again, just simply support and resistance lines, whether they be horizontal or rising or falling trend lines, absolutely, the moving averages. And we also have oscillators as well. We do take a look at oscillators, and I'll bring that into focus on the next screen or two. And of course, I cannot stop without saying, hey, come on, trade management. If you've got a small portfolio, we're all anxious to sort of jump in, make that first big trade because you just know it's going to go the right way. So you put all your money in. Well, that's absolutely the worst thing to do. Again, you've got to manage your money. You've got to know A, when to take a loss, and B, how much is reasonable. How much should you be trading with? Because again, that's very, very important. Risk management got to be number one. But again, when you combine all three of these, now you've got a success system. Without that, it's more like gambling. You might as well go down to the track. Okay, there we go. So coming back to crude oil, I haven't quite finished my story with crude oil, so we'll come back to this. And just so you guys know, we have customers in 87 different countries. Myself from Canada, living in London, and I see we've got people from Florida, Canada. We've got people all around the world. I've been as far as Turkey and seen this in action, Russia, China, Australia, India, absolutely around the world. And even I know we have a couple of customers in South America that call in every once in a while, and they do need help with a few issues. Candles work everywhere around the world. Yeah, Brazil, Marcello, thank you. Yes, I thought it was Brazil. So again, candles work in every market. You can be trading, as we say here, crude oil. You can be trading rice futures. It doesn't matter, and they work in the forex as well as the commodities, the options. And it's just a few of the basic items that you need to understand, and you can start to explore your options of how to trade. And it's all about your strategy. So we'll start over here on the left-hand side. Again, you can see the rising window here, and right, we're on a 15-minute chart now. So before we were on a daily chart, we flipped down to a 15-minute chart. So again, I'm just trying to get across here. It doesn't matter the time frame you want to trade. Some people are trading down 1-minute charts. I'm raising my hand. That can be me sometimes. Some people trade weekly charts. The candle patterns work. The whole system comes together. So we did have that nice rising window there, but again, we had a red candle. A little bit of a signal there of possible danger. Did have a lot of upper shadow, and of course the little s. So again, the Nissen Trader package is identified as a shooting star, and again, you're going to learn that through one of these mega packs that we've got. So again, we did come down a little bit, and then we bumped back up. But again, if I look to the top of that body there of the candle, I'd be looking for a little bit of resistance, and sure enough, that's exactly what we did. And then we pushed down a little bit of sideways, down again, up, and then sideways. So, again, these candle patterns do work for us. This is what I'm talking about when I'm looking at force of a candle. We've got a tweezer bottom, we've got a bull sash. You've, made a little bit of a double bottom in here. And my favorite, we've got a nice solid closing above the 9 and the 20, and in fact, in this case, the 50 period moving average as well. And that was it, we took off. But again, we've come back into that upper shadow high, Again, a well-tested resistance area, dark cloud cover, boom, we come back down. And again, you can use MACD, you can use stochastics. There's all sorts of different oscillators. It's all about the combination, what you feel comfortable with. I wouldn't use stochastics and MACD together. You've got to be able to blank one out. I do this only for the educational purposes. And of course, I do have Bollinger Bands in case you guys didn't know what these little green lines are on the either side of the market. So again, you can use that. So trading 15-minute windows, absolutely. There's no reason why that does not work. It's fantastic. So, and I do know one of the big things that Steve talks about in his mega pack. I've got the mega pack. I've had that for a long, long time. And to be honest, I used to review it twice a year. Every 6 months, roughly, I would pull out the whole packet and I'd review the whole thing. That's 4 volumes. It's a lot of material. And nowadays, even still, I'll pull it out and review it about once a year, maybe every 7 to 9 months, just to sort of pick up on little things that you forget. You don't go to the gym once and then say, I'm now in shape, I don't need to go back to the gym. No, you've got to keep honing your muscles. You've got to keep things sort of tuned up and in shape. Okay, we'll move on. We'll take a look here. This is a pretty nice time frame, actually, just so you guys know. 4 hourly, and again, depends on how you want to trade, but 4 hourly isn't bad. And you can see the market was sort of plodding along here. And this is where we had the jump up. So this was the Friday. This was the Monday where we jumped up. So we had that nice rising window. And again, same lines. I've just changed the chart time frame to 240 minutes. We retested that resistance area, and then we started to fall. And again, looking at this forceful red candle, this is where the market was starting to break down, back underneath the 9 period. And yeah, we came down to one of my favorite ones that I talk about a lot, the 50 period moving average. So again, yeah, we just bopped along there for a little bit. And then we dropped down, and as you can see here, we've basically closed that window. I think there's just a slight couple of pennies there for the window to still be open. But again, that looks not bad so far. But does that mean just because you've got a piercing pattern, and again, that's what the P stands for, it's plus, it's a piercing pattern indicating a potential reversal in the market to the upside, would you be buying on this signal here? And I'm going to give you a little bit of a secret. The answer is no at this point. And again, we need to wait for some confirmation. Yes, we've had a second green candle. That's great. But we're still closing underneath the 9 period moving average. So we got the 9 coming down, the 20 and the 50. They're all turning down. There's a good gap between them all. Look at your stochastics. It's starting to roll over. It hasn't crossed yet, but it is turning over. And if you're a fan of the MACD, you can look at that and say, well, fast line is still dropping and it's underneath the slow line. A lot of signals here to indicate not really the best time to enter a trade. Again, if you're looking for the higher probability setup, if you want to gamble, chuck some money at it, go for it. But for the higher probability setup, this is not the thing to do. And that's why, again, you don't want to trade simply the candle patterns themselves, because it will bite you. Again, you can see here you've had a hammer. You had a couple candles sideways, you had a little jump up, and by the time you had a reversal signal really over here, that was too late, you were losing money. So again, you don't want to trade simply based upon the candle patterns themselves. Right, I think that was the other thing that we wanted to say there, was that the Western signals, which includes the moving averages, by the way, well, they're lagging indicators. So, the candles are giving you the current price action. And of course, then you want to compare that with the lagging indicator. Hence, I use 9 period. I don't use a 10. I know it's only one digit off, but it does make it different for what I'm looking at. Okie dokie. Let's hit the next page. So we come back to the Trading Triad. And again, that's because my next page is going to be a little bit different. So hopefully, again, are you guys identifying, candlestick patterns, some potential entry points, but now you're going to be able to start comparing that and combining it with the Western charting tools like the moving averages, very powerful. And then it comes down to, your risk to reward. I said trade management before, but specifically a good portion of this is actually about your risk to reward. Part of that's going to be, well, what candle are you entering on? Where would your stop loss be? Where would be your next support level? Or where's your resistance area? Some very good points to consider. These packages go through all of that good information. It really does help you to clarify how best to trade. It's better when you can see it, and then you can make the right decisions. People like black box technology, and I've always said, but if there's a tool that says buy now, why are you buying? When it goes wrong, you won't understand why it went wrong. You also probably won't understand why you should have sold earlier and taken a small loss instead of a big gaping hole of a loss. XLE. So here we go. So this is related to crude oil. So again, for some of us don't want to trade crude oil. Again, you've got to have different accounts set up, and it's same way of trading, but there's different risks involved. So, you can always trade an ETF, which is an exchange traded fund. XLE is for the oil and gas exploration companies. So this would work very, very similar to crude oil, because as the price of crude oil goes up, well, so does this ETF, XLE. And there are different ETFs that do something very, very similar. So again, yes, you can see rising window here, bear hot of me. And actually, I didn't put a blue line up here, but you can see where this is. And roughly you can see over here, we did have another high up here as well. And pretty much this market only fell a little bit sideways, doji. So again, losing steam, close that window, and we've fallen down to the next level down here. So this is what I mean by, again, if you were to enter here, where's your next resistance point? The 9-period moving average. Not really a great risk to reward, because again, your risk is going to be down at the low on this candle back here, down around $60. So we'd only be looking at about $60.80 for maybe a first resistance area. And you're entering in around $60.40. So, definitely would not be entering now at this point in time. The packages, again, we go through a lot about the windows, rising windows, falling windows, all sorts of windows, what they mean and what you should look out for. There's a falling window right there. We have made an attempt to close that, didn't close it, and we've fallen quite hard. So we've got the 9-period now that's actually crossed. So and again, I know Steve talks about the crossing of the moving averages. So we've got, one of my moving averages has now crossed one of the other ones. That's a bit more of a negative signal and symbol. So again, keep that in mind. All this good information, this is packed into 3 or 4 volumes of information, and it's going to make a difference to your trading style, and I would like to hope to your success. And let's see, I think we've covered just about everything. I think one final thing, I don't have an example of that here tonight, but again, in the mega pack for sure, Steve does talk about Fibonacci. And if you guys have not discussed anything about Fibonacci, it's a nice overview that really does help. And I'm telling you, if we thought closing this windows was magic, and then coming down and landing right on this little support area here, if you thought this was magic, you need to check out the Fibonacci section, because again, once you learn how to draw the lines on there, and then it shows you areas of potentiality where the market might pull back to, it is absolutely amazing. And it just opens your eyes to, again, other patterns. So I don't use it to necessarily, I wouldn't use it to blindly trade, but for example, if we put a Fibonacci on here and then it showed the different levels coming down, as the market approaches each of these levels, I'm then looking for a potential reversal. Or if it's coming down hard and ugly, then maybe I consider a different type of transaction. So, again, you can really develop and build on your trading strategy simply with this 3 or 4 volume booklet that you get in this information. It is that valuable. All righty, so if we've got some questions, and actually there's the link to the packages that we've got available. Do have a look at that. www.candlecharts.com/mega, MEGA. Have a look at that. There's, again, 3 different packages there for basically the equities and ETFs. That's the mega pack. That's 4 volumes, and you've got the frontline Forex. You've also got one on options. So if you wanted to trade options but didn't know anything about it, you might want to consider some of that information as well. Paul, are you still around? Presume he's
I am here. I am here.
Yep.
Thank you so much for that quick overview. What I'm going to do, I'm just going to highlight a few things. What I'd love for anybody live in the room right now, if you do have a question, by all means, type those in, whether it's for me or Brian. Brian has a few more minutes before he has to head on to his next work. And what I'd like to do is just briefly answer a couple questions that I received during the session. So at that link, candlecharts.com/mega, if you go to that page, it will show you information about our 3 different, what I call mega packages. We have 3 different. One is our 4 volume mega package, which is comprehensive. and it would work for any markets, any time frames. We also have a 3-volume set called Frontline Forex. That's specifically for our Forex traders. And we also have a 3-volume set on options, again, specifically for options. So if you trade multiple markets, if you're trading ETFs and Forex and stocks and futures, I would recommend the 4-volume mega package. If you're only trading Forex, then you go Forex package. If you're only trading options, you go with the 3-volume option set. Any one of the 3 packages would also provide you with access to our university. What the university is for ongoing education. That's included with your purchase of any of the 3 packages for any ongoing educational sessions that we do specifically for our high-level students. That's included for lifetime, no additional cost. So if you own the mega package, or if you own the 3-volume Forex or the 3-volume option set, you would be invited to options university sessions. Those are always located also inside of our site at candlechartsacademy.com. So with that, again, if you have questions for either Brian or myself, be more than happy to help you out. What I can tell you in my own trading myself is I've been using the Trading Triad concept for a long time. I've been working for Steve for about 13 years now. And what it does, it allows you actual reasons for getting in, getting out, and sometimes my favorite part is not getting in or not getting out. So a lot of people tell me they don't have the confidence, or they're not consistent enough, or they just don't have the trading rules required to be consistently profitable. That's what these packages are designed to do. They're comprehensive, and as what Brian said, plan on watching them more than one time. So what's going to happen is you take your time. There is no limit to the number of times you can watch them. You also would have access to email our team directly with any questions. So as you go through the series, if you have a question, write it down, email it in, and we'll be happy to answer that for you. Okay. We got a question from Robert. Robert said the last chart was littered with windows, which surely diminishes their importance as potential support and resistance are. Yeah, Robert, absolutely. If you see a lot of windows on a chart, there's a couple of nuances that you can certainly use. One, which we cover, is in blending candles. I don't want to get way ahead of ourselves here, but to kind of remove some of those windows and kind of smooth out the chart, we do what's called blending candles, and that actually does work very well. Robert, great question. I do tend to see that often, especially on some ETFs, that you'll see a lot of windows, especially when those things are international, where they cover various markets. So you will see a lot of windows, especially on daily charts. But Robert, we do go through how to blend candles and how to kind of smooth out the chart. TD
Actually, Robert, I'll add in 2 bits for that, Paul, if you don't mind.
Sure.
Specifically because I was looking at crude, I wanted to give you guys an example of an ETF. And do keep in mind, the commodities do trade 24 hours a day, 5.5 days a week. So therefore, when the equities open in the morning, boom, you're going to get a lot more windows because of that effect. So that was one reason why on XLE, you're going to probably see more windows, and they will probably stay open for a much longer period of time. However, when you look and compare it to the crude oil, the commodity, the underlying, they tend to close. They close more often than not. So again, you need to compare both, even though you're only trading on the one. It makes a big, big difference. Hope that helps.
Great point, Brian. Always. TD had a question. Megas are books based on or online. So the mega packages, all 3 of them, are recorded videos. Okay. What they are is they were recorded from live seminars, and the videos are all online. What we also do with each one of the 3, so whether you go with the mega package or the Forex or the options, every chart that is discussed in the material, they're also available for you to either download or print. We do know that some of our students like to print those out so they can take notes on the charts. Other people like to download them directly to their computer, and they can have access to every single chart that is actually discussed. We also have TD the ability to have either the mega package or the Forex series in DVD format. I do know some people still like having DVDs, so we have those available in DVD. We do not have the option set on DVD, but we do have the other two. But all three are streaming videos. Again, you can watch them from any internet-enabled device, whether your phone, tablet, computer, smart TV, anything else like that. Hope that answered that question, TD, but great, as I'm sure other people either here live or via the recording are going to have that same question. All right, so we just have here a couple more minutes. Again, the link is candlecharts.com/mega. If you do have any questions, I know we're going to have a lot of people watching this via recording when we get it out there. My email, paul@candlecharts.com, and I'm going to type that in right now so that you have it in case you do have a question. And again, even if you do have a question for Brian, you can certainly email that to me, and I'll be more than happy to get that over to Brian to get you an answer. So just give it another minute or two to see if there are any other questions available, or from the people here in the room at least. Again, if you're watching this later via recording, by all means, email me, paul@candlecharts.com, and take full advantage of the candlecharts.com/mega package link, where we give you a lot of information about the 3 different programs and how it can benefit you, whether you're a brand new trader, an experienced trader, and like Brian said before, we have students in 87 different countries utilizing this. It does not matter what brokerage account you use. Thanks to Steve Nissen, I believe every brokerage business in the world now has the ability to have candle charts on their platform. And a lot of that obviously due to Steve Nissen's work. So I'd like to thank you, Brian, for coming out and doing the session. I know it's starting to get a little bit late in the evening there for you out over in UK. So thank you so much.
It's dark.
Thank you for staying up late with us. And thank you for all of those students here that are in attendance live. Thank you for those watching this via recording. Thanks so much. Look forward to working with you here at Candle Charts and candlechartsacademy.com. Have a great rest of your day.
Safe trading, guys. Bye for now.